Toronto sales from September to November already beat the last 2 years of fall market sales, even without December numbers. Sales September to November 2024 totaled 6,553 transactions between both houses and condos, while September to December sales totaled 6,451 in 2023 and 6,548 in 2022. Once you add in December numbers, which will probably be around 1,400 sales or so, we will have done okay. If this 1,400 sales in December transpires, we'll be about 23% over the last 2 years of sales for the fall market, but still about 20% below the average fall market transactions of approximately 10,000 sales. I was expecting increased sales for most of late October and November, as one of the daily metrics I look at is a sales to new listings ratio. Day to day, I keep an eye on what sold, what came to market, and how many sales are happening versus how many new listings are replenishing that inventory that is no longer available. More often than not, within the freehold space, I'd see on a daily basis that sales were surpassing new listings. Not by a huge amount, but in my local area of expertise, the sales were maybe 1 or 2 houses higher than the number of new listings, suggesting there is a return of buyers and a more balanced market. Admittedly, the condo market is not faring nearly as well, as it's still very firmly in a buyer's market, but I do see it having gone from pretty bad over the summer months to not as bad this fall. In the summer, I would see a sales to new listings ratio of about 25%, meaning for every 1 condo that sold, about 4 new listings would come to market. This past November, we saw a sales to new listings ratio of about 40%. This ratio can be a bit misleading because it sounds like an incredible amount of condo units would be on the market, but many get taken off and relisted multiple times a year, or instead get leased out to be sold in later years. However, overall, the sales to new listings ratio moving from 25% to 40% is a step in the positive direction for the condo markets, as it's showing increased demand in this subspace and a stabilization of prices. These increased sales and increased interest in the real estate market should not come as a huge surprise, as we've seen 2 jumbo 50 basis point rate cuts this fall, bringing the total rate cuts to 1.75% for the year. This is a lot and has definitely impacted variable rate mortgages, but not so much fixed rate mortgages, which don't seem to be dropping below about 4.2% on a 5-year fixed term, though that could change next year. I am hearing that rates will continue to drop into 2025, but will this be enough to spark demand this upcoming spring? Yes, very likely. For the last 3 years, sales have been below the 20-year average of roughly 33,000 sales in the city of Toronto between both condos and houses, all while total population has grown. There are thousands of would-be buyers that wanted to move and should have moved that didn't move over the last 3 years, and some of that was partially due to fear. For example, sellers in the downsizer market need to know they can get the price they want for their home to maximize profits, and some due to uncertainty, job security, or being locked into a fixed rate mortgage. But whatever the case, many people are itching to make that move after 3 years of down markets and will be trying their hand at it over the next 6 months. Is the housing market back? For freehold houses under 1.5 million, I don't think the market ever disappeared, and this will be a very active segment in the next 6 months. Houses under 1.5 million tend to be the first-time house owner price segment, and with the change in the borrowing rules, which started on December 15, 2024, that allowed for a reduction in the minimum down payment required for homes between 1 million to 1.5 million to as little as 10%, I think this will put some upward pressure on houses, especially in the city, as Toronto buyers tend to have higher incomes that can support larger mortgages. For larger houses valued over 1.5 million, I think there will be a lot of downsizers that are going to finally try selling, but I'm also predicting there will be more sellers than buyers capable of paying the price the sellers are asking. So if you're in a bigger home looking to sell, I think it's worth being early or first onto the market, especially if you're looking to explore or discover price, meaning you're looking to test out the market at higher prices before coming down to what the market is willing to pay. Leading up to March, the market will continue to evolve as more buyers and sellers come onto the market. But once April or May hits, I find the market, it is what it is, and you're unlikely to get more money for your home unless you either improve it or wait for a new season in the real estate market where the market will once again have evolved. For condos next year, I think we'll continue to be in buyer market territory, but we'll be digging ourselves out slowly such that there is less total inventory. I'm hoping by the end of spring that we'll be more in a balanced market. So what does this mean for prices? Well, no one really knows for sure. It's an extremely tumultuous time economically and politically, and I also feel that Canadians have fallen a little bit out of love with real estate as it stung them over the last few years. There are so many watchouts for next year that I'll be making a separate video on potential red herring items or events that can influence sentiment. Interest and mortgage rates do have a very high influence on home prices, but are not the singular drivers to whether prices go up or down. Supply and demand will also factor in a lot as well. As I mentioned, we will see increased demand. Buyers will be coming out home shopping, but we're also going to see increased supply or the amount of homes for sale. And really, the ratio of buyers to sellers will determine whether we turn into a seller's market, stay in more of a buyer's market, or trend towards a balanced market. If we look at what happened last time interest rates fell over the 2008-2009 financial crisis, home prices bottomed out before interest rates did, and when they rebounded in the spring of 2009. And by fall of 2009, prices surpassed the previous high. The big difference between then and now is home prices are over double what they were in 2009, while average household incomes are up only about 43%, which were approximately around $90,000 in 2009 to $129,000 in 2021. As well, interest rates saw a sustained period of low, near 0% rates in line with the US, while now our rates are decoupling from the US. And personally, I'm not entirely convinced that we'll see a prolonged period of low rates for the years to come. So that's it for me this time around. If you're looking for more insights on Toronto area real estate and would like to chat, you can schedule a call with me through my Calendly link below. Thanks for watching, and I'll see you guys on the next one. Cheers.